and we are joined by Scotty Ben.
Good morning. A Monday, actually coming in to the studio on a Monday.
Fantastic. And also the hero that is Scotty Ben on a tube strike week.
That was a bit interesting at Liverpool Street already this morning.
Oh, was it?
Yeah, I wouldn't like to be there in an hour or two's time. There was already some pretty irate people.
I woke up to messages this morning, Axel saying trains not even stopping on platforms. Chris is stuck at home. He might be doing a dial-in later on, but we'll see. But loads of people out there messaging this morning. Julian Wheeler will be on set today because he is getting on his bike.
Wow, what a trooper!
Yeah,
good for him.
So yeah, I had to get an Uber ride with a pet Uber for the first time. Obviously, you know, I was kind of like, I didn't expect me to turn up with a pet. There were no other Uber options available, all sold out, and the only one I could get was ride with the pet.
And what's the differentiating? Is it the vehicle, or do you have to have a pet, or what's?
Well, I was concerned the man was or the driver was going to ask me for my pet, but they have an extra big boot, and there's a cage in there, and I was confronted with someone in the morning opening the boot, going, and I was like, that's just me. I just need to get to work. So I think that's the only difference, that it has a really big boot with a cage in it.
Oh, okay. If we lived in the same part of town, you could have picked me up on the way and put me in the cage.
Yeah, this is my pet. So good to see all of you this morning. Read out some of the messages from our trader friends.
Yeah, so from Maturing, great question actually already early on. He's asking about the S&P additions, of which Hood is one of those, and if they're going to move. If we can just bring up my chart, if possible, just to show. So that's the aftermarket in Hood. As you can see, it came out quite late, so you can see where I'm hovering here, that big spike upwards. That came at basically 10 o'clock on Friday night. So nice. The truism that money surely does never sleep. But yeah, it's finally confirmed Hood, after a couple of false starts, is going to get added into the S&P 500. That's going to be on Friday the 19th, along with AppLovin and EME. Maturin's question was, are these going to move? I mean, look, you can see from the potential there that they could well move the correct way, as we used to call it in index terms, into the event, but be very careful as you get closer to the day, and they probably will be more volatile on the day because these things are so well flagged. So yeah, there's a chance it could trade higher between now and the actual event day, but it's definitely one to be careful of because this information gets into the market really quickly.
Yeah, Maturin is right to call that out because it's not the only one that is being added. I'm also reading that AppLovin and MCore also added. Caesars, Market Access, and Enphase will exit. So, you know, this could be a huge shake-up there. We've also got coming up, let's get to that first before all the comments. Right, Scotty, take us through the coming up.
Look at that. Well, the first two are obviously the highlights of the show. Overnight action with you and I, then the opening bell. Fast markets, Axel's very kindly going to step in to go through fast markets, he and I, and then probably the highlight of the morning, well, in fact, not probably, most definitely the highlight of the morning is going to be and Julian Wheeler with Expert Edge.
Julian's going to come back and talk more about Mongo TV that we came in to talk about last time, and other stocks that you might want to look at this coming week.
Absolutely. Then we've got all sessions at 9 a.m, Trade of the Week with Axel at 9:10, and then Technically Speaking, a game with Axel just shortly afterwards at 9:13. So a good morning for a Monday. Good morning to you.
Right, so let's have a look at some overnight action, shall we? A lot of buzz. Welcome to Overnight Action. Oh my goodness, Monkey Man, good morning to you. Monkey Man, one of our
morning. There he is, hand up as well.
Viewers there. Away from the numbers, Neil, morning to you as well. And Bigger Beers to James, good morning to you. And Derek Parkey, 1977. Julian C. Steve, CDR. What does the CDR stand for? And London Guide too. Right, plenty overnight. One of the big ones we've already covered, Hood and that excitement there. But also France is set to vote out another Prime Minister there. I mean, it seems like there's no end to this deadlock over in France.
It's another rattle for the bond markets. Again, this has been going on. The French political scene, as we know, is probably the most soap opera-like across the channel. Most of the other countries seem to be pretty steady, but yeah, France does seem to change its leaders pretty quickly. There was a tremor about this, but when we look at the European bond markets together with other global bond markets, they have calmed down. So this was all started to happen when we had worries a few weeks ago about bond yields rising, Japan again back in focus, US Treasury yields, but with the about turning interest rate outlook and picture, bond markets have definitely calmed down, so they are taking it in a better way. But yeah, unfortunately, France is one of those nations that does not structurally like to change a great deal for the population. So it's going to be another change there. Materially, what that means for the market is probably less acute than it was a month ago. But yeah, definitely something to keep an eye on there, just in case any curveballs come through.
Yeah, that's right. That's right. And also Japan, for those of you just catching up, we've seen Japan's Ishiba resigning after bruising election losses. Takeichi, who is a fiscal dove, now seen amongst the possible successors there. But Ishiba is expected to wait for the US trade deals to all be done and dusted before stepping down.
Yeah, that would make sense.
Yeah, and also over the weekend as well, I had so many memes, so many messages sent to me about Angela Rayner. In fact, on Friday, I was with Scotty having a coffee and a catch up just outside, and you were the first person to break the news to me, weren't you?
That's right. I mean, we were right outside the building of a large reputable news agency. Did we get there before them? I think we potentially did. Yes, absolutely. Yeah, we should start our own agency. Yeah, look, I mean, unfortunately, in these particular situations, the media makes it such a tidal wave of opinion that is very difficult to for her to stand. And again, it's not my place to have an opinion on these kind of things. I'm a markets person, but potentially does it give a bit of an opportunity for change? And in fact, I did see it's actually on the front page of the Times today. Let me just go to that. So it has said here, there's a little piece, just going to highlight it. Yeah. Sorry.
Whilst you're getting this up, I'll show you all some of the messages that I got over the weekend, and this is from Twitter. Someone sent this to me. Let's try and get that zoomed in for you. But there we are. I haven't seen it per se. I don't know whether this is real or not, but this is what's circulating in the Twitter sphere.
I think that's pretty.
At the moment.
Pretty punchy, isn't it? That's pretty punchy. I think nowadays there's less and less sacred things. I mean, if that was real, I wouldn't be surprised. But also, yeah, that's quite a lively thing. So yeah, so to go back to, we can go back to the front page of the Times today after that change. So these catalysts are as unfortunate as it is for Angela Rayner on a personal level. Again, this looks like a bit of an excuse for Starmer to potentially change a bit of the tack on potentially moving away from maybe some of the tax, try again to go for growth. I know this has been his mantra since he started, but perhaps this is a bit of an opportunity for the sea change. And then that's also echoed by, just to click back, sorry to be clicking around websites so early for people, but then we've got Simon French as well, the very well-known UK economist from Pamela Gordon, also talking about an opportunity for a bit of a reboot.
And
so its relationship with things like the Bank of England, because of how we handle our QT program, is unique, but not in a good way. And just how it handles inflation, the pension situation. So again, these could be catalysts for change. Whether they'll be successful or not is another matter. But yeah, that's a potential thing to look out for. And then also as well, I did notice that wage growth in the UK has slowed to a multi-month low as well. So that may help ease a bit of the pressure on the Bank of England. So maybe we'll just see a little bit of a change in some of those relationships in the coming weeks.
In fact, one of those stories was featured in the FT over the weekend as well, about how this could be a chance for Starmer to really change things up in the cabinet. He is trying, but he's come under fire, hasn't he, for not making enough change to spur growth and just tinkering around the edges, because clearly after the trust moment, they've had the politicians fear the wrath of the bond markets. But in the FT on the front page, there's this really interesting story about UK infrastructure financing on track to reach a record high. And this coming as we've got these obviously troubles at Thames Water. But the highlight of the story is that debt issuance highlights interest in assets despite those troubles at Thames Water. I don't know about you, Scotty, but this interest in UK infrastructure assets, to me, always is tinged with a bit of worry, because this just also means that it's another opportunity for the UK to flog off yet more of UK PLC.
It's a bit of a catch-22 really, where you get yourselves in these positions. I mean, we should have, as we were discussing Friday while we were enjoying some of the 1-year anniversary cake in the kitchen here, that we should have addressed it, whichever government it was, which would have been the Tories really. We could have potentially addressed all these infrastructure issues several years ago and just issued a huge amount of issuance, 1 year. I mean, 1% interest rate, 100-year infrastructure bonds. Unfortunately, now you're doing things piecemeal. And of course, if anyone were to come to us, let's say it's the Thames Water situation, if anyone were to come to us, they know effectively the UK is a distressed seller of this infrastructure, because the government doesn't necessarily have the opportunity to actually take these on and run it. So yeah, it's great that there's interest, but in the world of finance, there's always interest in distressed assets, and especially for key infrastructure things like water and so on. So yeah, it's a bit of a double-edged sword. Yeah. In my mind.
Yeah, and just whacking up a chart here on the FT, which is quite interesting. It shows you the UK private infrastructure debt issuance from 2011 all the way to 2025, and that light blue there is the expectation that if all things remain equal, we see the momentum carry forth, we will see this year the debt issuance on track to break 2021's level.
There's still appetite for sure.
Yeah.
There's appetite.
Definitely. Now, loads coming up this week. It's going to be a data-heavy week. And we've got some big news that's coming out, which we'll get to in a second, Apple and Adobe. But really, we've got a huge flurry of US economic data. The inflation report on Thursday, likely to be the biggest party in town on that front. And the report set to show that CPI probably rose to 0.3% in August, with annual CPI rising to 2.9% from 2.7% in July. Do you think we're going to see this expectation confirmed?
It could certainly make things a little uncomfortable, but the way the market is taking, if you look at if you think it was only a week ago that we had that big sell-off on the Tuesday as we came back from the US holiday on the Monday, then it's recovered back. Markets are just taking everything in their stride with the cushion of lower rates next year. Now, again, some people love to go out on various platforms saying, well, the last time there were rate cuts was in 08 and 01, 02 because lack of growth. I think with things like the CPI, it was interesting. I was listening to a breakdown of the jobs data on Friday, and they said most of the jobs growth was in lower paying hospitality and retail segments. So
that's right.
There isn't wage growth at the upper end particularly. So what that really means for CPI over the next 3 or 4 months. But look, since Powell spoke at Jackson Hole, and he was more of a dull than feared, even though he's only got a few months left, it's difficult to see any of the data really spinning spinning things out. Yes, the market sold off after the jobs data Friday. It's recovering back. So yeah, I think it would have to be a pretty big miss either way, I think, to move the market. But however, certain commentators out there do love to jump on words like stagflation. So of course the nightmare scenario would be a higher print. Interestingly as well, there's a kind of larger data set which doesn't always get a lot of focus, which is going to be out on Tuesday as well, where the Bureau of Labour Statistics are publishing its benchmark revisions for data for almost a year's worth of data. So again, there's expected to be more holes in the jobs data, so it's making the BLS numbers look even more, I don't want to say flaky, but less accurate than desired. So yeah, certainly that inflation print on
monkey bouncing, that's assuming the numbers are
yeah, well, exactly. Yeah, how do you correct an incorrect number? Is that a double negative? I don't know. Yeah, and so we've also got ECB meeting on Thursday as well. Now, the general narrative has been that, you know, rate cuts are done. They're back at 2% inflation. So potentially watch euro dollar into the latter part of the week. Should be an interesting one to keep an eye on. And the China trade data today was really poor as well, as US exports dropped. So yeah, a lot of mixed signs out there. That the tariffs are clearly having an effect still, but the headline numbers across markets and the general overall performance, you know, it's holding in pretty well. I
mean, the slant, if you like, for the markets is that we're still slanted towards risk on, especially at the start of this week. This is, you know, after what we saw with that jobs number as well. I mean, markets, as you say, just keep trundling along. Just showing you the US dollar basket, just to refresh your minds in case you, like Scott and I, were enjoying some of the last glimpses of summer. Hopefully we get an Indian summer on Friday. But shortly after that, we had this reaction after that jobs number, didn't we?
Yep.
And that jobs number spurred hopes that there would be a bigger than expected cut in rates. And you heard me here last week saying that, you know, all this would mean, you know, overall is a pressure on the dollar. But you could see that by around 5 o'clock, it started bouncing back up again. But that is where my cursor is. That was the initial reaction.
I think it's probably as well, if we look at the performance, are we able to go a bit further back? Or maybe like
here we are. Let's go to the weekly.
Yeah, I mean, again, you can see the consensus there is short the dollar. So you'll have these little reactions around the data. And looking at the comments there, just from the trader friends, Darrell making the point, gold 3,600 as well. So that's probably the one with yields where they are. Having recovered with the prospect of rate cuts, just seeing gold again, that's just telling you that the pathway is not clear for monetary policy and or growth. So after a few weeks of pretty much not doing a great deal over the summer, we've now had another leg higher in gold as well. So yeah, that's definitely worth watching as well. So yeah, thanks for flagging that.
What's incredible too is that if you look at you know, the indices, you know, Dow and also the Nasdaq, normally with all the uncertainty in gold, it sometimes comes when, you know, markets are you know, taking a beating. But all this uncertainty is happening as stocks are just, you know, we're making higher highs, right?
Well, I was thinking of you, if you could bring up a weekly on these, because I was just looking at weeklies this morning before I came in, and look, there's just a little bit of indecision there on those weeklies. Those last 3 candles, they're not quite dojis, but there is just a little bit of indecision creeping in, which just is a little clearer sometimes on the weeklies.
There we are. I'm going to highlight that.
Yeah, exactly. Yeah. So I don't know if that's, of all your encyclopedia of patterns that you've got at your fingertips, I don't know if that's called anything in the world of technical analysis, but there's definitely a little bit of indecision forming there, without a doubt. So
no, I think you're right. It also coincides with the what I always describe as you want rainbow lines, not twisted lines, friends. And can you see that indecision here mirrored by the 50 and the 20 as well? So when you see lines that just nicely go side by side like that. That's what we call, or I call, rainbow lines, because it shows a good trend, you know, the 50, the 20, the 100, possibly even the 200. And when you see the price action nicely above those rainbow lines, this is a really good indication that there's a strong upward trend there. However, when you start seeing twisting here, right, that is a red flag to pay attention, because the trend might be changing. Yes.
Absolutely.
So some of the other key ones as well this week. You're an Apple user or you're Android?
Oh, we are. I think our whole household. If Apple ever went down, I think our household would basically stick to function. I go back to being like the Flintstones. We'd be writing on slates with chalk. Yeah, I did see that. That's yeah. Look at that.
Yeah.
Oh, hello.
Hello. But also,
Hello, Mr. Owl. Good morning, Mr. Owl.
also the fact is, Apple on Tuesday. I know we got lots of Apple users here, but also Android users too. Many people in the gallery. Producer Phil, who's on his honeymoon at the moment, are very staunch Android users. I think Chris Beecham is also an Android user. But those of you that use Apple on Tuesday, Apple is going to release its latest version of its iPhone, featuring lots of new bells and whistles and upgrades. The key thing that everyone's looking out for is AI and a much slimmer phone. Now, I haven't had any sort of, great reveal or sort of sneak preview to this, but I can tell you that many of the analysts covering the space are talking about, what kind of AI features are going to be offered and how slim this phone can fit into your back pocket.
I mean, if that's going to be $2,000 phone or whatever it is, would you want it in your back pocket? I'm not so sure. I don't like things in my back pocket. But yeah, I did actually listen to something this morning where, that there's going to be the 17 Pro Max or whatever it is, and then the 17 Air, which is the smaller one you're talking about. Mentioned AI sports watches as well. This is supposed to be the biggest reveal from Apple since the last time there was a big reveal. But they have had several instances now of damp squibs at these product days. So as we can see from the recovery that they've had, and again, I was thinking of you watching it rally back. This is going to be a really key moment potentially for the share price, because it's probably one of the only Mag 7s I think still that are down year to date. Yeah. If I'm right on that. So yeah, this could be a really big one, and things like how they're going to upgrade Siri. I think they're going to use, if they stick with Google, they're going to. Apparently Google have already written a whole new version of Siri for them to implant into the new phones and so on. So yeah, it's exciting, but it definitely will be worth watching.
Yeah, and if you are wondering as well, because I know we've talked about this before, lots of people say, I'll never put anything in my ear. I'm not going to be one of those people walking around, likely to be hit by a car or a scooter or electric bike. And then now they're complete converts after using the AirPods. You're one of them, aren't you?
So am I. Yeah, I'm a complete convert. I must admit it. I resisted for quite a long time, and then I got some for Father's Day this year, which was very sweet of my family to get me those. And yeah, I must admit they're superb, really, really good.
I have not tried it out because I sing and I want to make sure my ears are going to be intact for as long as possible. And also I have an IFB, so does Scotty today, because he's wonderfully co-hosting with me. Such a pleasure, such a pleasure. And so that's why I haven't. But AirPods Pro 3 apparently is one of the big things to look out for at the great unveil on Tuesday. It's Invite, I've been told by my analyst friends. Many of them sing, by the way, in case you're wondering. There seems to be a huge Venn diagram convergence between quants, technical analysts, and tech analysts. So the invite was called ore dropping. The tagline in the Apple invite is ore dropping. In fact, I found a picture for you, so I'm going to put that across so you can see what the invite looks like. There we are. Ore dropping.
See this.
There we are.
Look at that. Look at that.
Yeah. So
well, they're definite. They're definitely looking to push a big thing there. Right now, the part of the show which I hate in a lot of ways because I've yet to get within a million miles of one of the charts, but it is Guess the Chart. I mentioned to Rich on Friday that actually in certain honour of me this week, you should have that song Scotty Doesn't Know on the chart of the chart of the day, because there will be no chance of me getting it right.
I've heard it's like top of the leaderboard for our songs that we've had on Guess the Chart.
Well,
if you love the
it's apt.
songs, do slam the like and subscribe button, because that will also help us. We've been lobbying very hard, Phil and I, to get a Spotify playlist and, you know, showcase James's wonderful work. James Watson is the brains.
Is it James, is it? Right.
Yeah,
very
and
good.
it makes me
good.
burst out laughing. Sometimes you hear me outside.
Oh, yeah. Some of the lyrics are brilliant. Yeah, they're very good.
Yeah,
they're very good.
So if you love that and want us to achieve, you know, not just the, you know, what we help Mature and do with Discord, but you want a Spotify playlist, do slam the like and subscribe button, and do tell us on the chat or ask at ig.com to me, so we can snapshot that and show that to the higher up. So this is my favorite bit. I'll try and okay. But we are going to have Guess the Chart really soon. Have we got a tune genre, people? Do we know whether? Okay,
UK stock. Okay.
Stock. But what is the genre of the tune? Do we know? Okay, it's going to be a surprise.
Leave the viewers in suspense.
Yeah.
Leave the millions of viewers in suspense.
Right, here we go. 3, 2, 1.
chart and come back for more. Bill points it out, crowd leans in, one bold call, who's gonna win? Cordelia Yates it, yeah.
Hey, welcome back, and we have a winner. Woo! guess the chart for us, Scotty.
British Aerospace Enterprises, BAE. It looks like the first man out of the traps was Darroch again, so a round of applause to you. But there was a lot of answers in a pretty compressed space of time. I could have, hand on heart, I could have sat here until the end of the day. But we've got bell time.
Yeah, we got bell time. Wow, are you ready? Here we are. And thank you very much to the person from One Stop Loss Street, Nottingham. We're still guessing who you are, but thank you so much for the bell I've been using during all sessions as well. So let us get through just quickly looking at the numbers there for you. Looking like a bit of a cautious but risk on day there. Pushing over to the FTSE for you. Let's have a look there. Scotty.
Marks and Spencer's, crikey.
I know, right? Up.
That's a pretty strong early move.
3% now.
Something must have come out there. Let's have a look.
BP also, while Scotty is taking a look at M&S. So BP is up 1.2% there. Whitbread also marching higher there, and we've got some of the miners doing well early in the session.
Rich will be happy.
As Rios are up 0.5%. First Neo also up 0.6%. Then Antos up 0.5% there. So copper those copper producers having a really good day there. Anglo's also up slightly. Rolls-Royce, Kate Murphy, you there? You still have that whole position on Rolls-Royce because that is up almost 1%.
She's actually on her way back to New Zealand. Last time I spoke to her last week, she's in Bali at the moment, just en route back to New Zealand. So she's had her break. Then she's going back to splice the main brace and raise the mainsail or whatever it is they do on boats. Yeah, look, I can't see anything out in Marks and Spencer's. I mean, up 3% on a Monday morning. I hope.
Bing! We've got something come through on the Ange filter. M&S Citigroup raises to buy from neutral.
There we go.
Right, so the price.
Somebody might have been cross after the tube strike and fallen on the keyboard or something. But no, that's great. Okay.
Yeah, like some of us who were left standing on the platform as the train zoomed past, like Axel.
Not a place to be.
You can ask him about it later on, but M&S, Citigroup raising the target price, just taking a look there, to 440p from 380.
Wow, what a turnaround, really.
But let's cross over to the losers list. Scotty, take us through the losers.
Let's have a little look. Unilever, again, a consumer staple, bit of a defensive one.
Consumer names there.
This is not dissimilar to probably what we saw a bit on Friday morning when Rich and I were talking, where we've got a bit of mild risk on, so the consumer staples are just having a bit of a pullback. See Reckitt Benckiser there as well. Phoenix Group down to, that's dropping as we speak. So yeah, there's definitely a cyclical or pro-risk tilt. Maybe as well some of this stuff we've seen in the press today about Rayner moving on might be a bit of a catalyst for Labour to get away from some of the drums they've been beating. And could that potentially be as a read across potentially a slightly softer budget if they manage to get a few growth plans in place? Who knows? I know there's not a lot of wriggle room for Rachel Reeves, but yeah, definitely a pro-cyclical look to things this morning, which kind of makes sense on the basis of how other markets are going. Yeah.
For those of you wanting a read on expectations ahead of the budget, the 26th, right? I think it's the 26th.
Of November.
Yeah, of November.
That's late. Is that late?
Late.
Is it
So
late?
I'm glad you pointed that out. So the whole thing about it being late, and also the fact that it's expected to be pretty
punitive.
Yes. I was trying to think of a very, very diplomatic word because, you've heard all sorts of horror stories, right, surrounding the November budget. But those two things essentially mean that the pound, and this is not just based on mood music, this is also based on the options market, and the whole thrust based on the options market that people are buying more protection. Right? Because they're expecting more sterling headwinds, just points to more sterling weakness ahead of the November 26th budget and beyond as well.
Well, if it's as bad as they're saying, it will certainly be a few tangerines and a sack of coal in the Byrne household. Yeah. That's for sure. There'll be no AirPods 3 or anything like that. Yeah. I can certainly say that for nothing.
Moving across to Germany. Let's have a look at the Germans. Winners first. Scotty, any of those pop out at you?
Yeah, look, again, a very similar sort of pattern. Interesting, Rheinmetall's having another push because that did stall for a while over the summer. That's a pretty well-held defence name.
Yeah, but they did so well the first part of this year.
Huge
First part of
performance,
this
yeah,
year.
huge. Interesting to see a couple of the autos jumping back. Volkswagen, they were having a little bit of a bounce, the autos on Friday, but again, very much a pro-cyclical start to the day there. Infineon, Airbus, Vonovia, Continental, Siemens, those are the big industrial names. So perhaps some of this stuff about the French political changes now, potentially priced in, potentially priced in. So
Yeah.
it'd be interested to see if we can spin to the other end of the hit parade.
Also,
like.
friends, just a heads up, of course, with all those names in defense and the German ones as well, it is the DSEI, which is happening at Axel this week. And this is the once every 2-year huge event where all of the defense companies come here to showcase and, of course, meet buyers and, the like. And it comes in a time when we still have heightened uncertainty geopolitically. We already have some headlines this morning from Waterpool and also German security agenda includes capabilities in the field of long-range precision weapons and return to compulsory military service.
Wow.
Yeah.
A sign of how the world has changed. Huh?
It is changing, and not many losers there, but just take us through some of the names, Scotty.
Yeah, Munich Re, I mean, those are pretty marginal, aren't they? Again, if you had to twist my arm, that's probably just slightly defensive in nature, but yeah, it looks like a pretty broad sweep higher in Germany this morning. Interesting, Daimler's a little weaker again with some of the cars being better, but yeah, that's a pretty conclusive sweep higher in Germany this morning, isn't it? There's nothing that I can really put my finger on there.
Yeah, moving over to France, let's have a look there. We got Total leading the winners list there, and take us through some of the other names, Scotty.
Yeah, I mean, and interesting to see Total. So some of the energy names which have been bombed out over the last few days with the oil price weakness. Again, we saw OPEC Plus. I don't know if we've mentioned that yet, have we?
Not yet. We'll get to that next.
Yeah, so we can chat about that in a minute. So yeah, certainly the energy names should have a bit of a bounce. But again, similar to Germany, Airbus is up. Thales, Safran, ST Micro, all the industrial / cyclical names. And a couple of auto-related stocks in there as well, just having another bounce. So yeah,
also it's really revving back today. Yeah,
I mean, I've got to be honest. I'm quite surprised at that sweep higher this morning, certainly across Europe. But again, it's a Monday. The markets are holding in. And hopefully that continues for the next few days, subject to the data, I guess.
Yeah. And just sweeping across now to the commodities space, because we were talking about oil punching higher there, 1.7%. This is WTI, them adding to the workspace there. But also Brent also up by around the same amount. Gold, of course, ticking higher. Just checking quickly on, we saw just now some of the oil names, the BPs, the Shells, marching higher there. So no surprise after that news from OPEC, right?
Yeah, it was another agreed output hike, but again, this time it's not quite as bad as some have feared. So oil's finding a little bit of a base again, which is helping some of those names as we've discussed. Anything else in the commodities there, Ange, that we've...
Yeah, and oil, of course, no surprise there, given as well the still dollar under pressure there, really, overall. But yes, let's have a look at copper as well. Copper is just ever so slightly higher after the renovation of...
So is there just a chance we could zoom out a little bit on that, if you can go back to your workspace?
Let's go to weekly, monthly or weekly?
Weekly, please, yeah.
We are.
I've lost the... Oh, okay, so it has recouped a decent amount of that.
That last candle higher was after they, had to refill the cable orders for this studio. If you've seen the wiring...
I can see where it's all gone. I can see. And maybe as well, I don't know if there's any copper in the ball bell, but certainly it's a very weighty metal object. So whatever that's made out of, that's probably rallied as well.
And also another thing that is moving copper is also the rising expectations that the Fed, of course, is going to cut rates. And after Friday, we had boosted hopes of it gave the Fed basically more ammunition to come up with a bigger cut than expected, right?
Yeah.
But of course, these gains as well, copper, I expected it to ride higher after Friday's gains, but I guess it's being tempered. Thank you.
Tempered, yes.
Ange hasn't had a double espresso yet this morning.
Yes.
I've only had a single. But being tempered by that weak data that we had out of China. So that as well.
Yeah, the China import-export data probably not helping. There's more stimulus needed there, but I heard someone say the other day, it's not the right kind of stimulus from China. I mean, what people exactly need, want and expect.
It's like sailing, isn't it? Not the right kind of wind.
Yes, exactly right.
Speaking of wind, what's getting wind behind its sails? Defense holdings. Andrew McKilvey, thank you so much for that. I hear yes, resounding yes from the gallery. Woo!
Sounds like the Greg sausage rolls are on the gallery today.
Yeah, Greg sausage rolls on Dom in the
Party time for Dom. Sausage rolls galore.
This is why Dom's driving the Tesla and I
That's
am not.
right, yeah.
But yeah, it doesn't seem to be weakening this big leg up here since we had who was the guest we had on that came on a few weeks ago that talked about defense holdings? Graham Dixon that was here and talked about this, and let's see if there's any news or it's just a march higher.
Yeah, I mean, a lot of the time, these stocks, that kind of price action, as we know, in that segment of the market, does trigger more interest. So more interest begets more interest. And if it is, as Rich said on Friday, excuse me, not saying that it is or it isn't, but if it is a Palantir type stock in the UK, signed contract with the governments, then yeah, that definitely looks like certainly one to be sitting in and sitting watching. So if we get another 40% tomorrow, I don't know what Dom's going to buy us tomorrow. But
Yeah. Savoy, maybe? Dinner at the Savoy?
Dinner at the Savoy, absolutely, yeah.
Defense Holdings appointing Nick Horton as their non-executive chairman. So that was out at 8 this morning, but I thought that was already expected.
Probably, yeah. I think this is just one good day begets another good day.
Exactly. And we often say here, quite often that, when a stock is just marching ever higher, you don't see people up there going, well, I'm going to sell and come in because at a low rate. Everyone's happy, right?
Yeah, of course.
Everyone's exuberant.
Well, it's one of these things whereby it can move very quickly at that price. And the more positive news, the more positive price action just adds up to it.
Yeah. Gallery, do we have time? Because Pelican, good morning, Mo.
We have to. Sorry, thoughts on IPO as
just
regards.
very quickly. So Klarna, shall I start off with that? Klarna, the IPO, I expect there to be a lot of appetite because they have delayed it over and over again. However, watch what they say about, if you can find out about hiring Pelican, because of the delays, they have had to hold off on hiring. They were aggressively hiring. Everything from, because it's buy now, pay later, especially on the legal front as well. But then they had to hold off, and I heard that there were cuts as well because, they couldn't push the IPO through. There just wasn't enough appetite. So the key thing to watch out for there, which will give you the true picture, right? We're trying to filter out the noise that we have on the media. Of course, they're going to say it's much awaited, anticipated, all that jazz. Yeah. But the true sense of where appetite is going to be headed for the IPO will be in their hiring reports. What do you think?
Yeah, look, I think these things are, now these IPOs are coming back to the market, especially one that's stalled like Klarna. Investment bankers are paid to make sure that the market will manage expectations well and manage the performance well. Long gone are the days, I think, of just hoping for the best with those two companies. Again, I would expect them to be strong on the day because that's what you're paying for, this expertise of gauging interest from your investor base. So
Yeah.
yeah, I would expect them both to go well.
Yeah.
Again, in a month's time, market conditions are going to dictate more about that. But yeah, I
Exactly.
would be surprised if it did not go well.
Yeah, and market conditions as well, as Scotty rightly pointed out, because of Klarna is so reliant on consumer appetite, right, Mo? So pay attention to that, because if that wilts, pay attention to the fact that they might bring down their pricing range as well. They already have, because they set it, I believe, at around 14. It would basically value the company at $14 billion. Sounds impressive, right? But not so much if you compare it to the $45.5 billion peak in a 2021 private funding round. So it has really taken that expectation back. But as I said, the hiring is a key thing. You don't want it to be buy now, pray later if you're entering.
Nicely done.
Ka-ching!
Nicely done. So
Right, so we've got Scotty.
that's not worth a like and subscribe for that alone. That's
Slam
gotta be
a
worth
like
at least
and
50.
subscribe.
It's got to be worth at least 50.
And that is a pun without the second espresso.
Absolutely. And on a Monday.
Yeah, we're going to go to a break, but don't go away, because we have Scotty and Axel coming up next, and Julian Wheeler after that.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome to Fast Markets. Coming in this morning was anything but fast with the London tube strike. I don't know about you, Scotty, but it took me a while to get here.
It was. I'm quite lucky because at the top of my road is an overground line, which tends to not get particularly affected. But you could see there was probably a 300% increase in foot traffic at each station that got closer in, and then into Liverpool Street itself. There's going to be a bit of carnage there later on because the Lizzie line's running, but they've shut all the metal shutters into the tube.
All right.
So a lot of people who don't normally use it, including my son, who's on his second week of his new job.
Oh no!
He's going to have to go out. I've voice noted him. He's going to have to go up and around to the other exits. But yeah, I'd say there's going to be a bit of carnage this morning, but it wouldn't be Monday without a bit of carnage with it.
True. So the question is, are we going to see something similar in financial markets? And I looked at a chart this weekend and found it really quite interesting. And my question is whether it's going to develop into something which looks like the FTSE 100 chart I've got on my page here. As you can see, you can't see my screen, so I need to share it. So maybe I'll talk about my screen in a minute once I've done that. But basically what I've looked at, if you look at your S&P 500 chart, we all made a new record high last week on Friday, but then the non-farm payrolls came out, and basically we ended up with the markets coming off and then going higher again this morning in Japan, as the Prime Minister resigned there. So the question is, are we going to follow suit, and is the American market this time following what we're doing, which is quite rare? Normally it's the opposite, and we're following them.
Very much so.
And are we going to come off this record high over the next few days? And whilst I'm trying to sort out my cables, maybe Scotty, you can talk about what you think.
Yeah, Ange and I, in fact,
markets.
you wouldn't have actually seen this necessarily as Ange and I were talking, but if we're looking at a weekly of these, I mean, sometimes I'm sure like you, I like to look at a weekly chart just to get a bit more of a drawn out context. And there's definitely the sort of indecision patterns are getting a bit more pronounced for the last 3 or 4 weeks. So we're grinding out small wins and small losses, but it definitely feels like there's a lack of follow through and punch to the market.
Yes, I totally agree. And also from a seasonal perspective, we're entering the phase where basically we seasonally in September tend to underperform, don't we, in US markets?
It seems to be as well the second half of the month. Is that right? Anecdotally, if I remember reading the data, most people seem to think it's through the whole month, and we do. And certainly anecdotally in the past, I've found that once the expiry is out of the way for the S&P, which is around the middle or sort of slightly the second half of September, there's a bit of a gulf in sentiment. And generally when there's a lack of real follow through or appetite, you do get a bit of weakness. So that makes sense that second half of the month is a cause for that. And then I suppose once everything's out of the way and you've got the Fed meeting.
Yes.
And then expiry 2 days after. So there's going to be so much open interest concentrated around those few days or that week. I think once that's out of the way, you could certainly see potentially, depending on the meeting and the noises they make, you could certainly see another move.
And before that, this Thursday, we've got CPI, obviously, which everybody's going to look at because that might tell us more about whether the Fed is going to cut by 50 basis points in September or 10 at the moment, or 25%. At the moment, I think the probability is over 90% that we're going to get one cut, but there's a 10% chance that we're going to get a 50 basis point.
Yeah, let me just check Polymarket, because that's one of our favourite sites that we use. It's a betting site. I don't know if you know that site, Axel, but it's a betting site. It's got every crazy every crazy thing on there that you want. But yeah, I mean, at the moment that pretty much marries with, you see the pane on the top left of the screen there, Fed decision in September, 50 plus bips increase, only 10%. I shan't actually hit any of the buttons on here because I don't want to bet live on TV anyway. But yeah, it's I think the 25 again. I mean, look, I'm of the mind that with the unemployment rate, sub 4.5%, and with asset markets where they are, is a bigger cut than 25 showing a little bit of irresponsibility? I don't know.
Yes, I think it would be quite aggressive, wouldn't it? I mean, I'd be quite surprised, to be honest, if we were to see it.
Yeah, it's certainly not meriting in it. That's without a doubt.
Well, now that I've got my screen up, actually, we can go back to what I wanted to mention. And you can
Yes.
see here what I looked at was right. So with the gallery's help, I finally managed to get the screen up here. And yes, we finally managed to show the screen. Basically, that's the FTSE, and as you can see here, the FTSE since the 22nd of August has come off a bit and then bounced back. But why did I look at this? Because basically, I'm wondering, if you look at the S&P 500, whether we're going to see something similar happening over the next few days. And the reason is purely technical, but you can see here, we're still in a very nice uptrend. We've got higher highs, high lows. We made a record high on Friday. So you would think, oh, everything's fine. But, and this is the big but from a technical perspective, is that this high is higher than the one made on the 28th of August, which in turn is higher than the one made on the 15th of August, all of which were all-time highs. So you've got higher highs in the S&P 500, and you still have higher lows, as you can see here, so all is well, you would think. But if you look at the oscillator at the bottom of the screen, you can see that the corresponding highs on the oscillator here are a series of lower highs. So that is called negative divergence for those of you who don't look at charts. Now, it doesn't always work, of course, but there is about a 65 to 75% chance that at least in the short term, it can lead to a correction. And if that were to be the case, what we could perhaps see is a retest of this sort of support area here we saw, going back to 6,350 or so, and which we also tested at the beginning of September. So that is my view short term. If we don't make a new high, obviously I'm going to look at the hourly charts and the intraday charts and see how the market reacts today. But quite often in the last few weeks, what we've seen is the FTSE go up, for example, European markets go up on the back of Asia.
Yes.
And then the US came in, and actually it dipped a bit, and then later on during the day the US went up and we went higher the next day.
Absolutely. Right, we've got a couple of questions from our ocean of subscribers. Firstly, from away from the numbers, Russell 2000, which has been a decent outperformer of late. I'm sure you're getting lots of questions on those, Axel.
Yes.
If you don't mind sharing your thoughts on that, that would be incredibly helpful.
So the Russell is in a similar position. I mean, it's still going nicely higher, as you can see here. If I zoom out, we're approaching the highs seen back in December of last year. There we have a nice uptrend. But now if we put the put an indicator on here, for example, the relative strength index. And for those viewers who watch my charting show, they will know that what I like to do is actually change the 14-day set period here to 9 days. I prefer shorter moving average, but here shorter oscillator, so 9 periods instead of 14, and you can see the same thing happening. So we're making higher highs, but the oscillator is making lower highs. So again, negative divergence potentially. That in itself, I wouldn't perhaps trade off, because it's just a secondary indicator. Price is far more important, of course, Dottie, as we know, than any oscillator. But if we were to fall through this uptrend line, and this is always important for me, not just the trend line break, but also the last reaction low. The reaction low is simply a low which is lower than the one to its left and its right. And that was made on the 2nd of September. If we were to fall through here, I'd be slightly more careful and look at perhaps this time period we just discussed,
absolutely.
Part of
It's just
September,
that's a
when we
good
could see,
reaction from that initial sell-off. And for those of you who listen to Rich's investing podcast, which I must admit is absolutely excellent, and if you don't, I strongly suggest you do. They were talking about the Russell about 3 or 4 sessions ago, where they were saying that the picture for rates, we talked about 5 rate cuts next year, and forcing more manufacturing onshore. A lot of the companies in that segment of the market have to go to banks for financing rather than the open market, than say an Apple who can issue bonds and so on. So that definitely explains the tailwinds behind some of that performance in the Russell. And then if we do have the time, I know we're being very US centric, but the final question back on the comments, if we could just jump to it, please, on the regular comments page from Pelican, with those again. look at those pink waving hands. How can we possibly ignore a question like that? So the QQQ, or I guess if you want to here, is it's US Tech 100 on our platform. So we might as well round off the US view if we can look at the Nasdaq. Because
Yes,
again,
we
that to
can.
me initially, just from my very simple kind of thought process, it's kind of struggling a little. I'm definitely seeing more price divergence among the Mag 7s, a lot more winners and losers now on a daily or weekly basis. So that's getting quite interesting, I think.
I totally agree with you, Scotty. And again, we saw negative divergence here earlier in August. You can see this high, the all-time high, which was higher than the July high, and you can see the oscillator lower. And we then had this sell-off that I'm perhaps anticipating for the S&P 500. But as I say, the price action will tell me whether I'm right or not. The charts are just warning me that potentially something's going to happen. But even if that were to happen, I mean, if you look at the Nasdaq, it's just trading sideways. That's not negative in itself, is it? I mean,
No, that's right. But I think for the impatient people amongst us who like to see things move, then that can be a little frustrating. But again, things like market breadth on the MISE is still, it's okay.
Yeah.
It's holding in. So the picture that the media is painting is not getting backed up by the price action. But again, I do think that with so much open interest for expiry next week, CPI and the Fed meeting, a lot could change the next time we speak or the next couple of times that we speak, I think.
yeah, I totally agree.
Okay. I'm being told in my ear from the lovely guys in the gallery that that's a wrap. So Axel, amazing as
Thanks,
usual.
Scotty.
Thanks for filling in.
Cheers.
And we'll see you all soon.
See you later.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Oh, yeah. Hey guys, where are you going? You're not going to get better than cash returns.
Hey, welcome back. So excited for this segment. Purely also not just because it's Julian really dealing with us, but the fact that he came in for us on his bike.
Oh, I did. Yes, I
How was the
did.
journey in?
It was, shall we say, crowded. Lots of other bicycles,
Yeah.
but we've all got here on bicycles. It's a lovely sunny day. Tube strike. What tube strike?
What? Yeah, I have to say I'm so pleased to see because I was waiting on specifically two stocks that I have positions on that you're going to talk to us about today.
Right.
Also, Maturin, Pelican, Andrew McKilvey, many of the people on our chat here, very excited last time you were on because of the MongoDB thing. I know Rich.
Oh, MDB, MongoDB.
Yeah. Rich sent me a snapshot, which I forwarded on to you of his options trade on that as well.
He didn't tell me he was going to buy them himself, but I'm delighted he did. For anybody watching and anybody listening and anybody who did listen to that, they don't always work that well. You know, you can't always get stock and the next day it's up 30%.
It's
Lovely to do that every day, but it doesn't happen like that. However, that stock was misunderstood by the market. Now they know. But by the way, that's not it. It's going higher. Haven't sold it.
Well, let's talk about that in a bit, but let's talk about Broadcom first,
Right.
because you are very keen. You've been keeping your eye on this stock for a very long time. Just showing you the daily chart first there, because it has been marching higher, like most tech-related stocks since that, April tariff tantrum. But it has had loads of legs higher recently, especially after the earnings. You were saying that you had been anticipating this for some time.
Well, the thing is, okay, so what Broadcom has finally proved, I think, on Friday, is that it is a legitimate competitor to NVIDIA. Now, the market's been thinking this actually for some time. And if you were to chart Broadcom with NVIDIA this year, up until the end of August, they are virtually neck and neck in step. There's like 1% between them. One goes ahead, the other one goes ahead. The trade has been the same for both. Now, the year performance of Broadcom versus NVIDIA is 20% different, of which 12 happened on Friday. So basically what happened on Friday is that Broadcom's earnings came out, and it wasn't the earnings themselves, because after the numbers came out, the stock was basically trading, just sort of pretty unchanged, up 1%, no big deal. And everyone was waiting for the conference call. And then Hock Tan, the CEO, just dropped the bomb and the stock reacted like it had been stung by a bee. It shot up. He said, we have a $10 billion order from a new customer. Now, a new customer for Broadcom of 10 billion, frankly, could only be OpenAI. What that means is that OpenAI is the last now significant player in the AI business, along with the other clouds, has basically said, we'll go with the Broadcom idea. What I mean by the Broadcom idea, it's been quite a sort of spat backwards and forwards, handbags between Jensen Huang of NVIDIA and Hock Tan of Broadcom about what's the best way to run AI data loads. And of course, everyone who knows NVIDIA use their GPUs, and this has been the standard. But what Broadcom's saying is, no, you can use what we call an ASIC. An ASIC, if you don't know what an ASIC is an application-specific integrated circuit.
Oh, I like this.
You like this?
I do.
Okay. So what does an ASIC do? Well, I'm going to give you an analogy, if I may.
Yes.
And do you drink coffee?
I love coffee.
Like
It's the one sin that I cannot get rid of. and I refuse to, because not only am I hooked on it, I love the taste, and I've been on, coffee courses, and I have my own grinder.
Okay.
Yes.
Okay, this is sounding pretty good. Do you have the same coffee every day?
Yes.
You do.
I
right.
do.
So, is it espresso?
Fine tuned to within, milligram.
Okay, so it's the same thing. So this is the equivalent of somebody who drinks, say, double espresso.
Right. Yes.
You can say, right, I only drink double espresso. So therefore, I can have a coffee cup that's exactly the size, and I have the machine, and I press the button on the machine.
The same grind size.
Grinds,
Yeah.
same thing. So every time it's the same.
Yes.
So if you do that, you want to be a Broadcom customer.
Ah.
Because then you're
I'm
using...
an ASIC.
You're an ASIC. You have ASIC coffee, because that means that every time it's the same. So you have the most efficient cup size, use exactly the right amount of coffee, you put the same amount of water in, you get the same result every time. Perfect. That is more efficient than using Jensen's NVIDIA chip, which is like having a large coffee cup that says, okay, this is for people who want a cappuccino,
Latte,
people who want a latte,
right.
small black, because any of those will work in my coffee cup because it fits all.
But my guess is you're paying more.
You pay more. You pay more for that GPU. It's more expensive because it can do more things. And what's happening here is that Broadcom are arguing, no, look, the bigger buyers of this, the Googles, the Amazons, and now it looks like OpenAI, they're saying, no, look, we're running our own models, our own specific internal cloud compute. We're very happy. We know what we do, and we do the same thing over again. And that means that it looks to me that the shift is heading towards Broadcom. So on Friday, the market went ta-da and put 14% on Broadcom. The opening. You see it there.
Yes.
Now, to buy the opening there, I'm afraid, was a serious mistake, right? Because 14% on Broadcom was about $200 billion. It's already 1.4 trillion. It's not small cap.
No, yeah.
Broadcom is the sort of least known gigantic company in the I think.
Huge, yeah.
Huge. So if you paid up on the opening, you were either greedy or panicking, one or the other, in my view. However, it settled down. It still ended up the day 9% up or something. And the difference now between them and NVIDIA is 20%
Right.
on this year. So the market's taking the view that A, it's easier for Broadcom to grow because it's smaller, and B, possibly for NVIDIA, the bad news is it's going to be very hard to keep those gross margins and push pricing like they have. Because if Broadcom is a legitimate alternative by the biggest players, I mean, remember, you and I aren't buying this stuff, right? The customers for this, there are only about a dozen customers in the world in scale.
So it's a pie that is, quite specific.
It is a very specific
Not many
pie.
slices.
Not many slices, and those slices have been gobbled up mainly by NVIDIA. Broadcom's going to take a few. The company I therefore worry for, and which went down the most on Friday, is AMD.
Interesting.
Because AMD has been sort of set up as the second source to NVIDIA. But if Broadcom's now going to be that role, then where does AMD fit?
John 1227 chiming in saying that the big players are investing big time on making their own chips. Rug pull on the way.
That's it. People making their own chips, as John says, they get those from Broadcom. They design them, and Broadcom says, okay, we'll take your design, I'll make it for you.
And we'll make it more efficiently.
I'll make it exactly how you want it. That's the point. So what he's calling rug pull on the way, he really means rug pull on the way for NVIDIA.
I like this. I really like this because, what this is telling me is that I should be, reducing my exposure to the NVIDIA and increasing my exposure to Broadcom, because essentially you're telling me that, other than the rug pull, but Broadcom also has this huge catch-up potential.
Yeah. I mean, look, NVIDIA is 4 trillion of market cap, and Broadcom's a third of that. Well, a bit less now after Friday. But so it's easier for them to grow. They also have other businesses too. I mean, Broadcom makes chips that go into wireless telephony. I mean, there's a catch-all of Broadcom. It's not so much not that NVIDIA's a one-trick pony, because it's a very big pony anyway. But Broadcom has probably a greater range of customers. But the fact is, actually, personally, I think the power is shifting back to the software.
Right.
The MongoDBs of the world.
From hardware to software.
Yeah, the hardware's, but you've got to build, hardware's building it, right? It's like building offices, right? We just build up loads of industrial chic offices like you have here. Once you've built those offices, you and I have got to have somewhere to sit here.
Yeah.
That's the software.
And all the tech and,
all the
the
bits and
software
pieces,
that feeds the
right?
tech.
Yeah. So the first bit has always got to be hardware. Then it comes software. So if there is any slowdown, you're going to see a slowdown in the hardware and the building and the construction and the power. All the physical stuff you can see is the stuff that's going to slow first.
Yeah, Bigger Beer is saying Avigo has so many other businesses, info security, networking, that's right, data centers, virtualization, cloud, they are huge.
Bigger Bees, spot on. They are huge. And the remarkable thing is, if you ask 20, 30 people, tell us about Broadcom, they don't know it.
Yeah.
Everybody knows NVIDIA.
And yeah, everyone knows.
Everyone knows NVIDIA. Everyone talks about NVIDIA.
Yeah.
Broadcom is this gigantic company. It's about the 7th largest.
It's a bit like Palantir before no one knew about Palantir, right?
Yes, absolutely. But the difference is Broadcom has been around for a long time. Broadcom has not come out of nowhere. But what Broadcom has done is it's just managed to position itself perfectly.
So Julian, tell me what you would say to someone, let's just say they've never heard of Broadcom. Now they're hearing about it on the show and they look at the chart. Let's whack up my chart here. This is the monthly, just to illustrate, how far it has risen, the weekly as well. And they go, well, from a chart point of view, where exactly do I enter? Because it's already marched, so far, so high, so quickly.
Yeah.
Or is this a case of actually, you just need to get in there because the parties...
No, I think, that is a huge move in a straight line, right? That's a huge move in a straight line. I would be confident you're going to buy it around this price for a while or better, right? So we could come on to, what's the market going to do? Because it is the market, it's a major piece of the market. The correction that still hasn't happened, as I suggested to you when I was last with you.
Yes,
still hasn't happened because things are going okay. But we're still into now September. September's, if anyone tells us anymore that September's the worst month,
Yes.
we get everybody's talking about
we'll
it.
be rich by now.
Yeah, so, and as I suggested, this year is clearly going to be a different year. Doesn't mean we can't come down, but we have got a rate cut coming.
Yes.
So I can't see the market selling off in front of Powell's rate cut.
Yeah.
And he's going to do that, by the way. There's no question.
It's just a matter of size.
We don't do surprise. We
No.
didn't do it. That's not how the Fed works.
Yeah.
So we're going to get our rate cut. But if you Broadcom, I think you could look. The way to do it is to say, look, I want a position in Broadcom. I'll have a few here, and I'll have a few if it goes down. Is another way of doing it.
So dollar
I know that's
average
cheating.
in?
Yeah, the old average over time, or average over time, because then you won't miss it. But you're taking a long-term view on Broadcom. Right, it has run significantly, but I don't see it as the massive overweight in people's portfolios as it is as NVIDIA is.
Yes. I mean, it's almost impossible to now get away from Apple, Microsoft, and NVIDIA, right? But
Yes, but you should.
yeah. So
The best one is Google. Anyway,
speaking of which,
Yes.
of getting away, this brings pain to my heart. But this is why how our market is created. Lululemon is what you want to talk about next.
Yes. Yes.
I did take off most of my position. I don't have a position now, but I did when their earnings came out. And I don't know whether you were one of those that I messaged at the time. I know Mature and I messaged you, and I was saying, my goodness, I'm waiting for the bounce in my pajamas, and there was no bounce.
In your Lulus.
No, not my Lulus.
Not in your Lulus. Not in your trackies. Well, there you go.
There we are.
That's not good. When stocks go down, there's often, a good reason for it. And that first fall last year, that's a year ago, isn't it?
No, this is the 5 minutes. This is to illustrate what
this is just
what I was
yesterday.
looking at in my pajamas.
Sorry, this is just yesterday. Yeah. No, you do not want to be, that is catching the knife at that point.
It was daily. Here we are daily.
There we go. And you can see that back there, the last couple of quarters, they've had one good followed by one bad. It's been very volatile from quarter to quarter. Okay, so I don't like it. I don't like Lulu. The only thing you're now going to say, well, look, it's cheap down here. I don't like buying stocks because they're cheap. That's not good enough. Like you can't sell Palantir just because it's expensive. You've got to have a reason.
Yes.
Right? Lulu's problem, I think, is that I think they're making a strategic mistake. Who am I to say? Well, they say we're going to try and grow what they call social and lounge. Now, this is on the call. Social wear, lounge wear.
Yes.
Which is not what their core premium performance customer
it's
is
not.
all about. The yoga teachers, the workout,
The single,
fitness is the very, very specific.
the dinks.
Yes.
Yeah.
Yeah. Thinks. Yeah. Anybody. We don't have to get them by personality, but we get them by what they wanted it for. It is performance athletic clothing. And that's what they're there for. And they charge a fair old premium for it.
It is expensive, right?
Expensive, right. So we have the problem that there are wannabes coming in cheaper, but we also have this problem that they are trying to grow down market. Cheaper social loungewear, not so clever.
Yeah,
because
so mass.
Mass. So this reminds me of years and years ago what Gap did. Gap dominated with their khakis. You remember all the khakis and all those, the pants, they had a very specific Gap look. And then to push the envelope a bit and to accelerate the growth, they decided, let's go bright colors, let's change it around a bit, let's bring on Banana Republic, let's do a bit of this, bit of that. And they got away from their core. And it was a disaster. They ended up with excess inventory, and in retail, excess inventory is a killer. What did Lulu say on the call? They said, oh yes, included in this earnings, it looked like they'd beaten earnings. It was actually a beat on this quarter. Well, why? Because they've piled up the inventory, haven't they? Inventory's up 13%. I don't mean inflation, I mean in units.
Yes.
Right? So that means they're bringing stuff in. But the real problem is, I think they were, shall we say, frugal, economical with the truth. They didn't tell anybody quite how impacted they were by this tax change.
Yes.
You're familiar with Trump's closing of the de minimis.
Yes, where all these big brand names, the Amazons, making things else where they could sneak in their goods.
Sneak in their goods.
Yeah.
The de minimis rule, if anybody's not familiar with this, was where you could, anything with a value of $800 and less could be brought into the US without paying tax. It's a bit like what we used to do on the old booze cruise. You remember, you'd rush off to France and bring over wine yourself. You bring it back yourself.
Yes.
Bring it in. No duty on it.
Yeah.
Right? We all used to do that.
Fill up your boot.
Fill up your boot. Right? We've stopped that now. Stopped it. Right? So what Trump has done there, it turns out that two-thirds of Lulu's sales into the US were being made in Canada and shipped in tax-free.
Using this de minimis.
And that's gone.
Yeah.
That's cost that, and it turns out that's $2 billion of sales. That's a lot of car boots.
Yeah.
Right? No, so the point is that's a huge amount of their sales that are now subject to cost.
And instead, what Lulu said was that, it was due to the low demand during the holiday season.
Well, they said that, no, they did admit that this was a problem. But what the analysts, a lot of the Wall Street analysts who are feeling, as they said, disappointed to have missed it and gnashing their teeth and saying, damn, why didn't I get this? It's because the company had not said, well, you know what, if that tax change in, it will cost us a fair old fortune. This was all news on the call, and people don't like surprises. Yeah. So you're going to have people selling it. I think it's got to sort itself out. And in their words, they now have a predictable offering. That's not good. So they want to change it.
Yeah.
So, look, it's a bit like, as I say, Gap was the biggest. Does it have a right to be the biggest? No, we found out it didn't. Does Lulu have a right to be the number one brand in this?
Bigger Beers here talking about Gap as well. Look at that, and we can.
There we are. You see where Gap is trading today. Exactly.
Yeah.
Gap is, Gap. I mean, has done okay this year, but over 10 years, you made no money in Gap.
No.
You could easily make no money in Lulu for 10 years. It's possible.
What is the, what is the point in which you think, okay, it's fallen enough now from a technical viewpoint? I know you were saying that you should never, buy anything just because it's cheap.
Yeah.
But let's have a look at Lulu, because is it a bit like buses? We often say, if a stock falls, in threes, right?
3 spikes and you're out. Okay,
Yeah.
so we've had 1, 2 there.
Yeah.
Right? April, August.
Yeah.
Let's wait for November. because they've basically got to anniversary this tax change, right? They've got excess inventory. They're going to have to wear that down. They may have to discount that. So that'll hit margins. I mean, they dropped 250 basis points in margins. That's just, I mean, in retail, that is catastrophic.
It is catastrophic.
Right? Now, when is it too cheap? Well, the answer is I don't know. I'll let the chart tell me. I don't need to be first man into that.
No.
Right? That will have to bottom. It will have to turn.
And change a strategy.
Well, if I see it change a strategy, so let's talk about, say, Nike, right? As an alternative. Nike was in serious trouble. They brought in a new CEO, they changed it round, and they changed the
You can have
strategy.
an Elliot Hill round now.
They brought him back, but they made two major changes. They basically went back to selling on Amazon, which they'd done away with, and they got their relationship sorted out with Foot Locker, who bought Dick's. And I mean, the point is, Nike, there was clear evidence of a change, and that meant Nike could be bought. And at Shard, we were buying that earlier this year on the change in Nike. So I'd much rather be in Nike than Lulu.
Great. I'm being told that I've got like 15, 20 seconds left. So quickly, natural gas.
Natural gas.
Yes.
Okay, natural gas. This is a longer term thing. This isn't news. Basically, Gazprom has said we're going to build a pipeline to China. That is massively significant. That changes the natural gas picture for Europe. It's a big negative for Europe. They're going to swap what would have been cheap Russian gas for expensive LNG from the States. They've built terminals in Germany. It's great news for the LNG stocks in America. I like Cheniere, ticker LNG. There are loads of other ones. Golar, which ships it. It's a tanker. There's a small one called SLNG. There's FLNG. Well, the whole LNG play in America looks set up, but this is long term. But natural gas is going to be more expensive across Europe than it would have been in the past because the Russian gas is not coming here.
Fantastic. Right, you heard that here first, and we have loads of people on the chat as well talking about not just Lulu and also Palantir and Broadcom, but also Andrew McKilvey. Thanks for giving us a heads up. Gold over 3,600 now. As ever, thank you so much for coming in and slam that like and subscribe button, people. Don't just be, we know that there are half of you there listening but not participating. And ask your questions, Julian, on ask@ig.com, which comes on to me, and I'll put it in front of him. As ever, thank you so much. And hopefully catch you a coffee after this. I might have to cycle over to you.
Yep, you have to come over to me.
All right, stay right there because we're coming up with all sessions opening back.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, 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 welcome back to All Sessions. Ring the bell, Scotty, ring the bell.
Goodness me,
Oh, here we are, the excitement. Let's have a look at how it's all shaking up here. We have the winners list up first. Go on, Scotty.
let's have a little look what we've got here. Plug power, crikey. That's a little bit not the kind of follow through I was expecting after some of the names we were talking about with Julian. It's
Let's have a look
probably
at.
just
Yeah.
we'll let them open up a little bit. Reddit coming up. Yeah, there's a few. I thought a couple of the bigger names would have just made an early print, especially after what we were talking about with Julian, which by the way was absolutely excellent, I thought.
Did you like the Broadcom call?
Well, I think as well, even when you were talking about Lulu, it's a great example of how, even though you might not run your own fund like Julian does, to always try to get a bit of a combination of the fundamental and technical. You don't have to know the absolute ins and outs of the balance sheet of a company.
Exactly.
Just understand what's going on.
And this is what I like as well. I always say on the show, your fundamentals and technicals should go hand in hand. They should be best friends, right?
Yeah.
And you don't ever have. I mean, I in my career, I've never ever come across anyone that says, "Well, you just have to blank that out," or "You need to do it one way."
Yeah.
I get it that there are people out there that do, but I just think, for someone who's in the market, especially if you're watching this day in and day out, you need to have two as a heads-up display.
Yeah, it's like only using your right hand to drive or your left hand to drive. You have to, and I'm sure. Look, the fact that for Julian he can come out with those kind of summaries where you just fire stocks at him belies the amount of work that goes into it.
Huge.
But you can still nowadays, with all the tools at our disposal, some of which are powered by Broadcom and so on.
And NVIDIA.
And NVIDIA, the tools at our disposal, you can appraise yourself, as we saw from Bigger B's on the commentary as he was talking. You can find out quite a lot, and you don't have to be an accountant, you don't have to be a research analyst.
Yeah.
But you do have to get context. I think nowadays in these markets, context is key.
Yeah, well, certainly an engineer. Many fund managers are ex-engineers. So taking a look across the board, we also have the Oracle's up 1.3% there. Airbnb, I know some of you like that model. I do not like that model, so I do not have any money in
Interesting to see
Airbnb.
Tesla up one. After that headline in the Times this morning about new challenges from China, but again, the impact of the China sales and new products were really felt in the numbers, weren't they? So, I mean, again, for Tesla, that's actually. Is there a chance we could have a little look at the chart?
Yeah, I'm just going to also have a look to see whether there's any extra news out at the moment. I've discovered a new hack with the IG.com.
Oh, go on.
It doesn't like you zooming in on the actual price action. So if you come away and you then type in another stock, then it's a bit happier.
Oh, okay.
But if you try and do it on this side, it's not happy at all. See?
I understand.
But once you go to add workspace over there, it brings that up.
We're back to normal.
Yeah, then you can
Normal service
zoom to your
resumes.
heart's content, right? So as you can see, Tesla still, this is the daily chart, friends. It is moving higher, but you can see that there's a very interesting formation there. That, as we know, is the hammer. And that is one of the, red flag signals that actually the party music might be about to change. Just so be aware of that. But currently up 1%.
Well, I mean, look at that for range. I mean, even if you just range trading, it's a bit of to say it's a twisted rope is a little unkind because the range is so big. But kind of 30 up to 35, that's a great range for it to trade between. So to take a check or to take a look and check to see if it can manage a breakout, or if it fails, I do think you get back to kind of 32, 31, 30 again, which has been a great level over the summer. I know we've spoken about that a few times on the show, how it got to that $300 and it was just, if you can time your entries, that was a great opportunity to accumulate a bit of those for a company which, is doing good things, but just the media just seems to love negative headlines. And maybe that hammer on Friday is a bit of a reaction to his $1 trillion pay package.
Oh, yeah. Yeah. Biggest ever, right? Biggest ever. And what's also interesting is that maybe it's also paying attention to many other competitors like the Momenta all beginning self-driving testing in Munich in the coming year.
That's interesting.
I don't know why they chose Munich. I've not been to Munich.
Well, I would guess it's probably the most US style city insofar as a lot of the big thoroughfares are 2 and 3 lane thoroughfares. So it's a very big, wide city. It's not, I mean, it's got medieval areas with the cobblestones and the squares and so on, but you can navigate around big bits of Munich, and there's lots of little arterial roads as well that you can kind of use it on. I can see the argument. It's a real mixture of the kind of modern expanded city together with things like the parks and the medieval areas. So it's a very big open city if you're driving. So I can see the argument for testing it there without a doubt.
Yeah, I always find it interesting when they, choose these big, wide open spaces, right? Like San Francisco, right now Munich, now that you explained the road system there to me, because I do a lot of testing, as you all know, of all these listed cars and all the capabilities as well. I get excited if they said, we've started testing in the roads of Bangladesh, or downtown Bangkok. Then I will be very excited.
I mean, self-driving there, I think you'd probably need about 3 computers and one in one vehicle. You say about vehicle testing, is this another of your hobbies apart from singing? And you're saying about vehicle testing?
Yeah. So I have had a long-standing history, not only trading and investing in car stocks, but also I used to cover the Paris car shows and the Frankfurt car show, and the fact that I love anything with a big engine, as you know. I like big engines, and I cannot lie. Those of you that know me for some time, you'll hear me talking about, the Neos, the Xpeng. I parked it with my thumb on an app, stood outside.
Sorry, on an app?
Yeah, I parked it with my thumb. And the last 10 years has been mind-blowing if you cover the space. No one's kicking the tires anymore, friends. Everyone's looking at the tech.
Yes.
The tech is what is now the driving selling point of these cars. So I've done the EV9, I've driven all of the Teslas, including hands-off, self-drive, but you still need to have your hands quite close to the steering wheel. So this is something, and also I'm familiar
with an operational.
It wants you to take over in case it makes the wrong maneuver. So just quickly, because we've not got a lot of time left, let's have a look at the losers list as well. So we've got MicroStrategy down more than 2% there. We talked about this on Friday, didn't we?
Bitcoin's kind of circling the airport at the moment, isn't it? And that's when things like MicroStrategy will just have a little bit of a pullback. Novos as well, still suffering the effects of those announcements earlier on this year. Actually, might we have a quick look at the Novo chart just to see, because I've lost context of actually where they are, if that's possible.
So yeah,
that's not
here we are.
Blow your laptop up.
No, Novo is down 1.5% all sessions at the moment. It continues to, creep lower, but let's have a look at the weekly chart for you there. It is.
I mean, that's a pretty steep trend line you could draw.
Yeah, I mean, it is pretty clear there. Let's show you what we mean. But technicians always say you have to go and do not cross that. Do not cross the wicks. I'm trying to show that to you here, just a rough idea. But it is, you know, in that real down channel there. You cannot dispute this. I'm also going to join.
It looks worse on the weekly than the daily, and that's why sometimes I do like to look at the weekly.
Yeah.
Because you do get a different picture.
Yeah, you also want to what I call you know, zoom in on at least 3 time frames just to make sure you're not missing a trick somewhere. But can you see it lines really well with the daily as well?
Yeah.
And Nova there, like many of the others, moving in a downtrend because a lot of the generics and you know, more competition from like hims and hers coming through.
Yeah, absolutely.
Right, gallery, have we got a bit more time left to go through some of the other losers, or are we starting to come up on time? Right, so let's just have a quick look elsewhere on the losers list. We also have Mara Holdings down a third. It is mostly cautious but risk on day there.
Snapchat not really moving, but that just cannot catch a break, Snapchat.
No, it cannot catch a break there. It's one of those that just keeps moving. Let's have a look at its chart if we can. Snap, where are you? We could do with some bigger screens, couldn't we? Here we are.
There we go.
And Snap's also been added on the 24-hour offering here. Just a reminder, friends, we are moving quite a few stocks now to the 24-hour offering, so you can, yeah, which is fantastic. So Snap there, as you can see, this is the daily chart illustrating what Scott and I were talking about. Just can't catch a bid there.
No, absolutely.
It's a lot of pain there. So just rounding up here, big week for macro. We are also, you know, starting to count down to some inflation numbers as well.
Yep.
And not forgetting Apple's great unveil on Tuesday. Stay right there though, because we've got tons more coming up.
We do.
We've got also Axel coming up with his trade of the week and also technical analysis.
Fantastic.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat, come on. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
welcome to this week's Trade of the Week on Monday, the 8th of September 2025. And today's trade is one I actually did live. I just bought some currency. I bought the yen. So what I would like to do is to go short the British pound against the Japanese yen. And let's just have a look at this chart. And you can see here sterling yen once again testing the 200 mark, 200 yen mark, psychological resistance, which held back in August and again here at the beginning of September and again today. Now, obviously, we had news out overnight that the Prime Minister in Japan resigned. That led to a lot of volatility. And the question is whether the Bank of Japan is going to continue on its current monetary stance or not. And I believe that from a technical perspective alone, the 200 area, as you can see here, is very difficult to break through. So, personally, as I said, I bought currency, but that's because I'm going on holiday. But if I were trading, perhaps it's a risky strategy because you're risking, you have a very tight stop, but you are in a zone where basically the British pound against the yen topped out every single time since October of last year, and even did so here at the middle of last year in July. So we have to go back all the way to July of 2024 for it to not work and for the currency pair to trade above that. So that is the idea. We would go short at current levels with a stop loss just above today's intraday high. So very, very tight stop. And then a downside target probably around these lows here, around 198 yen and 10 sen or so for this trade of the week. But before I summarize it again, I'd like to talk about last week's trade of the week, which was Chris Beecham's. And that was absolutely perfect because he basically got in here at around 137.50, I think, the US dollar against the Canadian dollar. And then he had an upside target around 113, I think 139.30 or so. But what I am saying is perhaps get out of that long trade because we had a very tight stop on here. So currently we're up around 4% and we're starting to come off now after the non-farm payrolls data out on Friday, which was much weaker than expected. And that could in the future perhaps lead to further US dollar weakness, which is why I would like to exit this trade of the week from Chris Beecham from last week with a profit of around 4%. And then the week before, we also had a palladium trade on. That was mine. That one worked out really well as well. We went long here. And basically, we had an upside target at 1,190. That got hit last week. And we got out of that one again with a nice profit. So coming back to today's trade of the week, it is to short the British pound against the Japanese yen, and to do so around current levels just below 200 yen, with a downside target around 198 yen and 10 sen, and a stop loss very tight just above today's intraday high, let's say at around 200 yen and 40 sen. Hello and welcome back to Technically Speaking, where I'm going to answer your questions on anything to do with technical analysis. Somebody said here, love the Palladium call. Thank you. Some of them we get right, some of them we get wrong. But, trading is not about just getting things right or wrong, because you can make money being right only 30% of the time. And I know some very successful ex-fund managers, such as Tim Basser, for example. If you look at his trades, he was right, or he still is, probably around 30% of the time, still a very, very successful hedge fund manager. And basically, you could be right 70% of the time and still lose money. And it all has to do, therefore, with risk and money management. And for IG clients, actually, tomorrow evening, I'm going to do a 2-hour seminar at 6:30. So if you're an IG client, contact your premium client manager. It's just for premium clients, but basically contact them and you can join me on this 2-hour workshop talking about how to structure trade, how to make sure that your risk reward is correct, how to get the probabilities in your favor, how to use technical analysis correctly. So coming back to trade of the week, I just wanted to mention again, and I did so last week, I know, maybe a bit cheeky, you know, a lot of people, I know a few at least, this beginning of the year said, okay, I'm going to do trade of the weeks, I'm going to do all these trades, even though I keep saying I don't trade any of these setups. And the one today, I basically bought some currency, so I'm not trading it. But basically, I had these people create a different account, do all the trade of the weeks, and then at the beginning of the year, we were very unlucky, got stopped out. My stops were too tight, I think 6 times in a row, and we were down just above 6%, I believe, on trade of the week. And a lot of people, after 3 or 4 trades that went wrong, just stopped following these trade of the week setups. And since then, I think at the moment we're up 32%. And that's with risking 2% of capital per trade. So you get phases, and I kept saying that even last year when we were up over 31% year to date, for the whole year, I mean, we had phases where we got 5 trades wrong in a row. This happens. It happens. I can statistically show to you, and I'll do so in the webinar tomorrow evening, that it is normal for this sort of thing to happen. And even 6 times in a row, it does happen more often than you think. So don't be disheartened when you get a series of trades that go against you. Make sure you perhaps reduce your trading size when you get to the 4 or 5 in a row wrong. Thereby you lose less. And yes, it will take you longer to get back on an even keel, but at least you won't bleed your account dry. So it's all about risk and money management more than anything else. It's far more important than being right or wrong, unless you have a strategy which can be tested and where you have 70%, 80% probability of being right. In that case, you could, for example, look less at the reward to risk ratios, which is what I do a lot. I mean, so for example, for trade of the week, we risk 2% of capital, but we're trying to make 3, 4, or 5%. And if you're right half of the time, which we were last year, then you will still make quite a decent 2-digit return on your investments. But we can talk more about that later on if I get questions. I've got lots of questions in the meantime here. Let's start with these ones, MicroStrategy. And again, I'm just looking at charts here. I'm fresh, so I'm not giving any trading advice. I'm just looking at the charts as I see them. So what can we see? What can we all see together? We can see a downtrend, can't we? Since the July highs, we can see a series of lower highs and lower lows. So that is a short-term downtrend from the July high, very clearly defined. What about the longer-term picture? Well, we can see we had a very strong uptrend between 2024 and basically for most of 2024. Then we came down, then we had another uptrend, and now we're coming down again. So the question is, what sort of trend are we in at the moment? Well, we can see that from the highs seen back in November of 2024, we have come down. We tried to make a higher high in July of this year compared to the high in May. But since then, we have fallen through, and you can see here we held here back at the big end of July, and we've fallen through this support area here. All this cluster, as you know, I look at clusters of previous lows, previous highs, and these are the resistance and support areas. And you can see here we fell through this support area here in the middle of August, and now we try to retest that, and this has acted as resistance. So for me, this means that as long as we stay below this resistance area here, and that's probably up to 36,700 in this daily financial bet, the trend is your friend, and that's still pointing lower. So I wouldn't be surprised if MicroStrategy, we were to basically fall through the low seen last week. And in that case, what's our next downside target? Well, we've got these minor lows here going back to the 3rd of February and also the 10th of January. But then the next bigger one really is this one. It's a more important low. So I would then expect the area around 28,509 to be hit on this daily financial bet. So that is if we were to fall through last Thursday's low, because in that case, the downtrend would continue. Now, what would change my mind would be a break off that downtrend line. Let me just draw that in on here. So that's the downtrend line resistance line. So we would have to go above that, and we would have to really take out this resistance area here going back, as I say, to this sort of low and these sort of highs. So probably have to rise above the July low for us to then reverse, because what we then see is a trend line break, a break of the last reaction high, and then positive momentum could once again be on the cards. But unless that happens, the trend is your friend. Now, if you're a very, very long-term investor, perhaps you might stay in your trade, because as Scotty said earlier on, he likes to look at a weekly chart. But on the weekly chart, yes, I mean, you could say, if you're willing to risk that much, that you would stay long as we stay above the February low of this year, because that's the last big low here. And as long as we stay above there, from a long-term perspective, we would still be in an uptrend from a longer-term perspective. But as I said, since July, we have been in a downtrend and we are still falling. So just be aware of that. Now, if we go and look at another chart here, I've been asked a question about Lam Research Crop. I don't know Lam Research. Let's have a look at this. Corporation. Crop was a typo that I just read off here. Interesting one. And what we can see here on the weekly chart is that we tried to retest the previous highs going back to July of 2024, failed marginally below there, and since then have broken through an uptrend. And I can see this here on the trend line. But then actually we managed to bounce back since the beginning of September and are trading back above this uptrend line. For me, a trend line break, as I keep saying on the show, is only valid if we fall through the trend line and through the last reaction low. Where was the last reaction low? On the weekly chart was the end of July low, and on the daily financial bet that was made around 9,085. And you can see here, yes, we broke through the trend line, but the uptrend's not broken. It's just becoming flatter. And that often happens. You basically get markets becoming less bullish and they just flatten out. So your trend line needs to be redrawn, in this case an uptrend line, because it's got 3 touching points more or less here, or a support line if you want. But as long as we stay above that low and the low seen in at the end of July, we are in a sideways trading range within a longer term uptrend on the weekly chart. So let's look at the daily chart, and you can see what's happening here. I can straight away see that we potentially have what is called an ABC Elliott wave correction on the daily charts, where wave A down, wave B up, wave C down. That distance is similar in length to this distance here, which leads me to believe that that was a corrective move lower. And now that we've bounced off this low here, we're heading back up again. Now, what I would like to see to confirm this view is basically a break through the downtrend line. Let me just do this again here. So we can connecting these ones up, and you can see here whether today we can break through this downtrend line, and then to confirm above the last reaction high, which is the high seen here on the daily financial bet at 10,489 on the 28th of August. If we break above there, it's very likely we're going to go above this mid-August high, and in that case, we will most likely attempt to retest the July peak here at 11,339. So for me, that is still a bullish chart because we held above the late July low. We are just seeing a corrective phase in 3 waves, and you can see something similar happening here in July, and basically something also. Oh, my screen just went. I don't know. I hope you can still see it. Here in May, we also had this sort of zigzag correction, and then we continued. So basically, that's to me still bullish. Stop loss, if I were long, would probably be if it's a tight one below the September low. Because it's quite close to the July low, I would probably trade slightly smaller, but have a slightly wider stop and put it just below here. Now, what do I mean by that is, for example, if I were risking, and I personally risk no more than 3% of capital per trade maximum, and I go down all the way to 0.25%. But if, for example, you enter here and you have your stop loss here and you say, well, you want to risk 2%, what you could do is, for example, you could say, okay, I'm going to have my stop slightly lower. In this case, I'm just going to risk 1.5%. So you position size smaller in order to allow yourself to have a wider stop, and therefore a less of a chance of getting stopped out, because you are trading in the direction of the uptrend, basically. So the odds are in your favor. It's like swimming with the tide. And therefore, you would be very unlucky. That would be a sideways trading range, which then turned in a bearish trend if we were to fall through the July low. Unless that happens, you just continue higher. So I'd still be bullish on this chart here as well. Oh, I've got lots of other questions, so let me go through the other ones more quickly. And if you have any more questions, just ask me. I can't see Orsted AS unless you mistyped it. Could you just resend that one in iDarok, please? Let me look at another one. Oh, it's CFC only, so I can't do that. Eagle. Let's look at this one. Eagle Mines. Let's do the US one. I love charts like this if you're long. I mean, look at that. Isn't that a lovely uptrend? And, people say, let's just sell into this. Gone too high. It can't go any higher. Well, it's just an ABC correction like the one we just saw in the previous chart. And then we just continue. And now let's look at the longest term time frame because I don't know this company. And you can see we're trading in all-time highs. Mining share, very, very bullish indeed. I would have to do a Fibonacci, or we can try to do a Fibonacci extension analysis on this. Let me just see very quickly how we can do that. So Fibonacci extensions, what do? You take a low from where a new bull trend happens. So let's just ignore the ones on the left. Let's just say it's the lowest point here. So we take that low, connect it up to the highest points of that bull trend here before we had a correction to the downside. So we connect those two up. Then we move our level down to the lowest point of the correction, which followed that up move and which then began a new uptrend. So that would be this low here, going back to September of 2022. And if I connect these up, that then gives me, oops, shouldn't have clicked on the right-hand side of the mouse. Let's just do the, sorry, that's a Fibonacci retracement. Sorry, let's just do this again. It's probably a good idea to do it again because it's where a lot of people go wrong. So basically you take the lowest point of a new up move where the bull trend started, August 2015, take it up to the highest point here of that up move, September 2020. Then you project it upwards, that distance from the lowest point of the corrective move down. And let's just, what am I doing wrong? I can't draw these correctly. Let me just try one last time. Sorry, bear with me. So we connect these up. And what I want to do now is move up my charts. Why doesn't it let me do that? Oh, here we go. That's why. So we've gone above the 161.8 Fibonacci extension, which is 161.8, and that derives from the golden number of this move here. And that target was hit, and we're going through it. So that would indicate that it's very likely we're going to go to the next one, which is the 261.8 Fibonacci extension, which would be quite a way higher. So that could be an upside target. You could do the same sort of analysis from these lows down here to that high. Well, let's just do it very quickly. Then I'll go to other questions because I've got quite a few of them, so I want to go through those. But let's just do one more time so I can show you how to do a Fibonacci extension. So if you say that the up move from July 2002 to that high seen here in March 2008 is an uptrend, and then you connect that distance from the low here in November 2008, that would give you an upside target, which comes in at also 161.8, also been broken through here. So again, that's a cluster. When you have a cluster of Fibonacci extension levels, quite often that's a major level in the future. So from the strengths I've seen so far from these technical projections, it looks very likely that we're going to see far further upside in these all-time highs. So if you go on the daily chart, if you're long, that is, basically let it run. That's all I can say. I mean, if you want to have a tight stop on here, you would probably take the last big reaction low. That's the mid-August low here on the daily chart on this daily financial bet at 13,005. As long as we stay above there, the trend is very clearly up. From a medium-term perspective, you would probably go much lower. You would probably go all the way down towards the May low for stop loss, or even the April low for stop loss. But I mean, all I can say, it's a very bullish chart. Even if we were to come off short term, we would probably get new buying opportunities around these August highs here, or if it really were to correct around these April and June highs, and also the highs here in July. But basically, this is a very bullish chart, and don't try to pick a top, just let it run. Try to pick a retracement and go into these trends. So if you see something like this happening again in the future, it'd probably be more of a buy opportunity than to sell into this. Next chart, Taylor Wimpey. Let's go and look at this one. And what we can see here is with these UK house builders is they haven't done really very well in the last few months. And as you can see here, we've come off quite a lot. If you look at the monthly chart, first of all, you can also see that from a long-term perspective. I recently wrote an article, I think last week, on house builders in the UK in general. And the 5-year returns on quite a few of them haven't been that great. Unless you look at total return where you reinvest the dividends, in that case, some of them perform quite well. But as you can see here, on the monthly chart, we've been trading sideways since 2015. And right now we're trading towards the bottom end of this 2015-2025 sideways trading range. And it's still not looking very bullish. I mean, come on here, we're trying to bounce back, but we are now currently testing the April 2025 low, which acts as resistance. On the weekly chart, you can see that too. Can you see here, we've got the low from April, and we've got these lows going back to July of 2023 and the lows of December 2022. So a lot of resistance. Perhaps if you want to make it higher, wider, all the way to October of 2023, that was made 102 pence and 30. Basically, as long as we stay below that resistance area, which we're testing right now, the trend is still down, even though we look bullish in the short term, and even though we are potentially breaking through a downtrend line. But as I said to you before, downtrend lines, I want to see a break above the last relative high. So you could say, oh, look, we've broken through this downtrend line, and we have. And we did so on Friday, and we're continuing to do so today. But what I want to see now is a rise above the last reaction high. So it would be probably this one here. So I want to see a rise above the August high here, and that was close to my resistance area, so just above it. That's probably around 103.20. Once we rise above here, you could say, okay, fine, we've probably broken through this downtrend line and we're now reversing to the upside. Unless that happens, the trend's your friend, and look, we've got lower lows and lower highs. So just be careful, because you might think short term, oh, it's really looking bullish, but it might once again peter out and just fail, like it did, for example, here at the end of July of this year, and we just continued the trend to the downside. So just be aware of that. Another chart to look at is Deutsche Börse. And we can see here Deutsche Börse, correct pronunciation by me. Similar chart to Taylor Wimpey. As you can see here, we've been drifting lower since May of this year. We tested support last week around the April low, trying to bounce off, but we still have a series of lower highs and lower lows, which is the definition of a downtrend. On the long-term chart, though, as you can see here, we had a very bullish run. Perhaps that's coming to an end, I don't know. But you can see here with this doji forming here in April, and ever since we've had we're currently in our 4th consecutive month of lower levels for Deutsche Börse. If it were to fall further, how far could we fall? Well, basically, you can see here, we haven't got really any support to speak of on the monthly chart until we get to the January 2024 high, and that's on the daily financial bed around 19,490, so a long, long way away. And here on the monthly chart, let's make it actually a weekly chart because it'll be clearer. We can also see that we have broken through an uptrend line, and we can see that break here through the uptrend line also then took us through that last reaction low, this important one here, this hanging man low from the 28th of April. And we did so with quite a bit of momentum on the 21st of July in that week, and that was negative. And what was interesting then, if you zoom into this, can you see here, we basically tried to bounce back, but failed below this point here, which is now resistance because of inverse polarity. That was acting as support. Once we fell through the trend line and through the support level, we then had this acting as resistance here, as you can see, that high coinciding with this low. So basically, since then, we've seen a series of lower lows, lower highs. We have tested the low from April. We're currently holding above there, but the trend is your friend, and currently on the weekly charts pointing down. On the daily chart, if we draw a trend line on there, you can see also that we're trading below the downtrend line and continue to do so. We're now trying to bounce back. We probably will encounter resistance around the late July low here, around let's say 25,000 on the daily financial bed. Then we've got resistance here going back to the 31st of July and this low here on the 12th of August. So that takes us up to around 25,185. And as long as we stay below all of that and the downtrend line, for me, I'd be more inclined in selling into any bounce and trading in the direction of the trend. But that's me speaking personally. If you are a long-term holder of this stock, well, you could place your stop loss below the April low. Why is that more important than this low? Because in 2 days we had a very sharp decline and then we bounced and made a new high. Here we just sort of drifted lower. But if that were to go, it's very likely that we could fall quite a bit further. And as I say, we could quite easily probably drop towards 22,600 on this chart. So that's my interpretation of Deutsche Börse. Let's look at other ones. CHG. Let's have a look at that. And if you have any technical questions to do with charts, to do with how to interpret your charts, or look at things like oscillators, I can go through those and tell you how to use those. So let's look at Chemring Group, and you can see here we've just been trading sideways. Now, is that bearish in itself? No, it isn't. Again, a lot of people become impatient when this sort of thing happens. If you're long, just keep it. Because the trend is your friend. Because if you look at the monthly chart, you can see here that we're trying to form a base. Obviously, it's a long way away from where it was trading back in 2011. But you can see here that on the monthly chart, we are actually looking quite constructive. We had this saucer bottom here. It took a long time for it to form. But once we broke above this high seen in 2022, that was bullish. We had a retest of it, fell through it, and then we had a really strong ascent here since February of this year. And we took out the high seen in March, and we took out the high seen in August 2024. At this point, I would have technically become, very bullish. So here we've had an uptrend. Now we're just consolidating. That in itself is not problematic. Even if we were to fall through the low seen here in August of this year, we might just sort of drift lower a bit. But as long as we stay above this long Marubozu candle, for me, that's still a bullish chart. And quite often what markets do, they retrace about half of the body of this candle. So you take the distance from the open on this weekly candle to the close, take half of that distance, and you can see that halfway area acted as support back at the end of July, the beginning and middle of August. So basically, from a short-term perspective as well, as long as we stay above that low here made on the 20th of August on the daily financial bet around 515.5, for me, we're just trading sideways. What I would like to see to get the share here reinvigorated is perhaps a rise above the 29th of August high here at 549.50, in which case we could go back and retest this high here, the 6th of August high at 572. Now, that would need to be broken for us to then head high again. We can see there's a lot of resistance slightly higher up. So it's probably going to churn for quite a while longer. And the other shares we looked at previously certainly looked more bullish or bearish. And as you know, with spread betting, you can go either long or short. And I would personally prefer to trade something that's trending either up or down than something that's just going sideways. Because unless you have a system whereby you could, for example, trade on the 60-minute chart and you mean revert every time it goes up to a certain level and you buy it when it goes back to a certain level, you could try that sort of strategy. Unless you do that sort of trading, these sort of trends are not really that interesting to most of us because we sort of get bored and then make wrong decisions and not always follow our rules when this sort of thing happens. So let's look at some indices as well, because I mentioned earlier on in the show that perhaps the S&P 500 could now start to weaken slightly. And right now, that's just an idea. It's nothing more than that, because nothing has technically told me that we are coming off. But I'm seeing signs that we may. So what do I mean by that? The charts is showing me that we may potentially be forming a wedge. And a wedge formation happens if you basically have this sort of thing happening. So you can see here, we're forming this wedge. So we're grinding higher, making new record highs, and have a series of higher highs on the daily chart, but we are also losing upside momentum. And I mentioned earlier on that we basically have this negative divergence on the relative strength index, where we have lower highs here accompanying these higher highs here on the daily chart, telling us the strength, the underlying strength in the index, in the S&P 500, is not that strong. Now, on Friday, we had quite a sharp sell-off because of non-farm payrolls coming in at 22,000 instead of expected 75,000, so much weaker than expected. And at first, the S&P came down, then it bounced because we were expecting the Fed to cut rates in September, and then it came down again. And it did so because suddenly investors were starting to worry and saying, well, hold on a second, maybe the US economy is not doing so well. And yes, we could be cutting rates, but who knows, if the economy starts to weaken, that might be a problem longer term for the US economy. And basically, that's why we came off again. But then we rallied. We are rallied in Asia for other reasons. And you can see here we're trading back towards the highs. So I said, maybe we're going to come off. Maybe not. This is just a probability game. But what do I want to see if we do come off? Well, in the very short term, I want to go below Friday's low, because that was the last reaction low after important data. And perhaps we'll see that on Thursday with CPI coming out of the US. And then if we fall through here, I want us to fall through this uptrend line here and to fall through the last reaction low. And that's the 2nd of September low. Now, because that's marginally above the low seen here at the middle of August, I would probably look at the August low. So that one here is probably around 6,344. A fall through here, only then would I probably start to say, okay, maybe we're not going to go any higher. What I would do in the meantime, if I were long, I would probably have tighter stops, look at the intraday pictures, see what the market does, etc. But right now, it's just the possibility of a wedge. It's just the possibility of us having negative divergence, therefore coming off in the future. And we haven't taken out any support levels yet, so the trend is still your friend. So don't anticipate what the market will or won't do. Look at the charts and be ready for, if it were to do what you think it might do, what you would do then. So basically you're preparing a scenario. If that scenario starts to play out, you're ready to then trigger a trade and do what you think is right. Unless that happens, follow the trend. That's probably the safest approach to trading that I know to basically use. Now, what did we mention? We also looked at the Russell earlier on. And if you look at the Russell, similar story, making new highs here, looking very positive. Here, the wedge isn't really that clear. It's just a series of higher highs, higher lows. But again, we've got negative divergence here. But who knows, if we continue to go higher here, that oscillator will also go higher and we won't have negative divergence anymore. So I wouldn't sell into it simply because of that. But if we were to fall through this uptrend line, then I'd become more interested. And definitely if we were to fall through the 2nd of September low again, that's my reference point for everything at the moment. Here on the Russell at 2,324. Once we fall through here, because that's also where the low was made on the 26th of August and the highs here at the middle of August, basically once we fall through that support area, it may indicate that we could go further down and correct further. Unless that happens, again, the trend is your friend, and it may retest these highs going back to November of last year and also the end of November, beginning of December of last year. So don't jump the gun, follow what the market is actually doing and look at that. Now, what I think it may do in the future, as I said, is something like the NASDAQ. It may sort of do this sort of thing, correct for a few days, maybe then trade sideways, retest, maybe try to retest the high, maybe fail, etc. But that sort of thing happened here as we had negative divergence when we made an all-time high here in the middle of August. You can see here the oscillator was lower than the previous high made here in July, and sure enough, we then had this sort of correction after a few days of sideways trading. So this for me might be in the cards, but I need to see a trend line break. I need to see a break below the last relative lows for this to be confirmed. And as I said, those lows are the 2nd of September lows. So for me, technically, as long as we stay above these 2nd of September lows on all these charts, the trend, your friend, is still pointing upwards. Now, let's have a look at another chart. Okay, the French one. Yes, well, basically, the CAC 40, obviously, we're going to get probably most likely a no confidence vote in France, which is a really big problem because it's the second one now in a year, because the current government and the Prime Minister, François Bayrou, can't convince the parties on the left and on the right to agree that France needs to look at its budget and implement some cuts because they can't keep on spending like they have been. And the political parties don't seem to care, which is and could be very detrimental to France. So we'll have to have a look at what the bond market does. Most of it is probably already priced in because we definitely expect a no confidence vote to go through today. And Chris Beecher, my colleague, is going to write an article about it, which you can probably see on our website pretty soon. But as you can see here, the French CAC 40 already had its reaction here last week and at the end of August, and we've been trading sideways ever since. So make sure that you don't trade the news flow, because quite often these sort of news flows are already priced in. And when it happens, then it's just confirmed. So who knows, the market might actually bounce back even though there's a no confidence vote. So basically what we're seeing here is a trend line break, and you know that I want to look at a break of the trend line, but I want to see a close below the trend line and below the last reaction low. What have we seen since, technically speaking? So forgetting all about the politics in France, forgetting about bond yields in France, we just look at the CAC 40, and what we can see here is that, yes, we retested that low from the 26th of August, but we haven't closed below it. Yes, we closed here on the 1st of September below that uptrend line, but we haven't since then closed below that low here. And every single time we try to do so, we actually hold. So technically, we're just trading sideways. And because we're trading sideways, this support area between the 26th of August low and the low we made so far here on the 2nd of September low, that's our support area. And again, like on the US charts before, if we were to fall through the 1st of September low in case of the 2nd of September low here on the French CAC 40 at 7,645, then it's likely that we will slip further and retest the low seen in August of this year around 7,523. But only then. Unless that happens, we just trade sideways. Now, is it a bullish chart? By all means, no. You can see here that the CAC 40 has definitely suffered because of its political instability. Since May of this year, we've just been trading sideways. And basically, the big reference points are this low here in August. And you can see here that was made very close to the June low of this year at 7,494. So basically, as long as we stay above that low here, which incidentally was where the highs were made back at this April bounce with President Trump's announcing that the tariffs would no longer be as bad as before. That was this 9% jump in the US markets. And you can see here that acted as support in the French CAC 40. So as long as we stay above that, we're just trading sideways. And basically between 8,000 psychological number on the upside and downside around 7,500. Now, if you compare that to the German stock market, even though Germany's been in recession, in and out of recession for the past 2 years, and is on track for its third consecutive year of recession, actually, which hasn't happened since the Second World War, it's still bullish. But again, as you can see here, we've seen a rotation out of European stock back into US stocks, and you can see the US stocks are really outperforming. But here, the German stock market is just trading sideways. And again, like in the CAC 40 case, as long as we stay above not just the August low, but the more important low here in the middle of June of this year at around 23,000, we are still in a sideways trading range and may still break to the upside. But since the highs seen in July, we have seen a lot of volatility, which has now decreased a bit. Can you see these candles becoming shorter? Then increased again on Tuesday of last week. And now we're seeing perhaps more volatility again once entering the market. But here we can see that over the last few weeks, we've been in a downtrend. So you can see these European markets not doing as well as these US ones. As I just showed you, for example, here the Russell, that's still trending higher. The S&P 500, that's still trending higher, but it's showing signs potentially of topping out. So just watch those markets, watch the indices, watch the individual stocks. Oh, I've got a question here. Why did the German stock market not come down even though it's in a recession? The very good question. Well, basically because a lot of the German stocks, those companies, Germany is a huge exporter, as you know, a net exporter, and the money they make abroad. So therefore, most of Germany's income, the automakers, BMW, Mercedes, Volkswagen and so forth, make their money abroad. And yes, they did take a hit with Trump's tariffs, and maybe that's why the DAX is underperforming now a bit compared to US markets. But basically, shares like SAP, for example, tech stocks are still doing very well, and the German stock markets is a market which is geared towards outside of Germany. So a recession in Germany doesn't really impact it that much. Similarly, in the UK, if you look at the FTSE 100, let's just finish off with the FTSE 100. We can see that the FTSE is doing very well here because of its component of a lot of defense stocks. And also, even though a lot of oil and gas stocks are in there, they recently dragged the FTSE down. We've bounced back here. And you can see that the FTSE has actually done very well this year so far. Right now, we are just looking better than the German CAC 40, the French CAC 40, the German DAX 40. We can see here we've come off our record all-time highs, but we also look slightly weaker here on a sort of 3-4 week basis because we've drifted lower from our all-time highs. We're currently bouncing back. We're not going anywhere though. So what I would do on the FTSE chart, just to finish off with this one, is to basically, again, draw my uptrend from the April low on my chart and see whether we break through that uptrend line and then whether we fall through the last reaction low. So what would that entail? That would mean we would have to fall through that uptrend line and through the low seen here on the 2nd of September. Again, the 2nd September low is key for the medium-term trends. If that were to happen, we would probably drop to the next lower low, and that low here comes in around the August low. And you can see that August low was made around the high seen in the middle of July. So previous resistance acting as support, and then if this support were to give way, that would then again act as support going forward. So that's how you analyze your charts. But again, as long as we stay above the last reaction low, that's to say the 2nd of September low here at 9,102 on the daily financial bet, the medium-term uptrend is still intact. What we're seeing though is a loss of upside momentum, and it's possible that we may drift lower again in the future. But right now, that's just a possibility, and we don't know whether that is going to continue or not. But anyway, we're in an interesting phase of the year now in September, where historically speaking, US markets tend to underperform if you look since the 1950s. Let's see whether this is going to be the case again this month or not. Thanks for watching. See you again on Wednesday.